students, welcome back. This is Dr. Mercado. Welcome to Accounting 1303, Introduction to Accounting 1. And in this lecture, we are going to be covering content from Chapter 4, which deals with journalizing and posting transactions. In this specific lecture, we are going to be going over part of Problem 498, Part 1. And I say part because this is a very long problem. I am not going to go through the entire problem with you, but I am going to show you how to enter transactions in a journal and then transfer that information over to your general ledgers. Okay, so I am going to demonstrate the process, and then once you understand and comprehend how to complete the process, you can complete the rest of the problem on your own. Okay, so before we begin, what are we going to be covering in Chapter 4? So in Chapter 4, we are introduced to the general ledger. The general ledger basically is a record that keeps track of all of the transactions per one account. So we might have 50, 100, 200 accounts. We have one general ledger for each of those accounts. So the journal provides the day-to-day record of the business transactions. So that's when we do our journal entries. Okay, but that does not give us the ending balances of our accounts. In order for us to be able to figure out how much cash do I have, how much supplies do I have to transfer that information over from the journal to the ledgers to be able to determine the ending balance of each specific account. Okay, now this is the manual process that is done. In the real world, we use technology. Okay, so for those students that are going to be taking QuickBooks or are majoring in accounting and are going to be taking computerized accounting courses, then you'll see how easy it is to transfer information from the journal to the ledger with a click of a button. Okay, but before we click that button, and the system does whatever it needs to do, we need to understand what the system is doing. How is the information being transferred? So learning the manual process is necessary to be able to understand what the system is doing. Sometimes systems make mistakes, sometimes systems do not work, and you have to come up with these balances. So therefore, you need to know how to calculate them. Okay, so we're going to be doing the manual process. It is tedious. Yes, it is, but it's just a process that needs to happen for us to be able to get those ending balances. Once we get those ending balances, we can then proceed to preparing our financial statements. Okay, so that is what the general ledger is. It is a summary by account of what happened during a specific period. Okay, so we have to balance each of our ledgers. We're going to have one general ledger per account. Okay, so depending on how many accounts the business has is how many general ledgers you're going to have. So you don't commingle information. Every account has its own separate general ledger. So we are going to learn the balancing process of those ledgers. How do we come up with the ending balance? Okay, so that's part of the process that we're going to be doing in this specific problem. Okay, so a ledger is balanced after every transaction. So we have to transfer the information from the journal to the ledger, and at that point in time, calculate the ending balance as of that date. Okay, and then we bring in the next transaction and we calculate the ending balance as of that date. Now, the textbook does a wonderful job in providing you with a lot of examples. Okay, I just wanted to take the time to go over it with you. That way you could see how I move from my journal to my ledger and how I figure out if I need to add or subtract the amounts. Okay, so I'm going to kind of like guide you as to how is it that it's done. Now, the textbook does a good job in providing you or outlining the specific steps that you need to take. So they have 4 steps, and this is the same process whether you're transferring a debit or a credit. The only difference is that one you're going to put on the debit column, the other one you're going to put on the credit column. Okay, but the instructions are outlined and they give you examples on your book. You have to post the information from the journal to the ledger. Once you've done that, then you have to go back to the journal, okay, and enter the account number where you posted that transaction to. That way we can have a reference. Okay, this transaction was posted to this ledger, okay, and we'll go ahead and we'll see the process in a bit, okay. Make sure that you do read the chapter. A lot of information is provided, a lot of examples. Please review. If you have any questions, please do not hesitate to reach out to me. But please make sure that you do read, because I will question you. Well, on the page, it explains it. Have you gone over that page? There's a lot of information. Please review it. Now, problem 4.9 is a monster of a problem, and guess what? You are going to have this on your test. I am not going to go over the entire problem for time limitations, plus it's very repetitive, okay? I am not going to go through the whole process and give you all of the answers for all of the transactions. No, I'm not. But I am going to go over maybe 6 transactions, and that should be more than enough for you to be able to understand the process of transferring the information from the journal to the ledger. So we've got the problem here, problem 4.9a, and it's broken down into 2 parts. The first part is the journal entries and the general ledgers. The second part deals with the preparation of the financial statements that will be covered in a separate video, okay? So this one will focus on posting to the journal, and once we've posted the information from the journal, we will transfer to the individual general ledger accounts, okay? So we are provided with information. We have Anna Jackson, Open Jackson Consulting. She rented a small office and paid a part-time worker to answer the phone and make deliveries. We are provided with the chart of accounts. Now, each account has an account number, and we're going to be needing those account numbers, okay? So these are all of the accounts that the business has as of today, right? And then we have a whole bunch of transactions from January the 1st through the 30th. These are transactions for a month. I'm not going to go over, like I stated, over all of the transactions. I've selected the first transactions, maybe the first 7 transactions. 6 transactions to look at. That should be more than enough for you to get an understanding of what is it that needs to happen, okay? So they're asking us to set up the general ledger accounts, which I've done. I'll show you in a bit. We have to journalize the transactions, and we should be recording them into 2 different page numbers, okay? So the transactions from January the 1st through the 10th go to page 1. January 12th through 24 go to page 2. And January 25 to 30 go to page 3. So we have 3 pages of journals, and that is very important because we need to know in what journal page number we posted for when we transfer information to our ledgers, okay? And then once we've done that, we have to post the transactions to the ledgers and prepare a trial balance, prepare an income statement, and a statement of owner's equity. Now, this problem in the system is broken down into 2, Part A and Part B. Part A is basically just doing the journal and the ledgers, okay? Part B deals with the trial balance and the financial statements, okay? So I'm only going to focus in this problem on the first part, which is journalizing and posting to the ledgers, okay? So let's go ahead and let's look at the first transaction, okay? So we're going to first journalize. I'm going to journalize 6 transactions only, and then from there we'll take it on. You should get the jinx of what needs to happen. You all should be very familiar by now because we have been analyzing transactions for the past 2 weeks. So you should be familiar with the process of analyzing and recording transactions. This is just going to be kind of like a refresher. So you should know what needs to be debited or credited for these transactions. Now, my recommendation as you are analyzing and recording these transactions, from chapter 3 lecture, there was a figure 3.2, the accounting equation. I would recommend that you print this out and that you have it handy. I have this memorized by heart, okay? You need to know what the normal balances is, if it's an asset, if you debit or credit, okay? If you're not at that point where you have this memorized, then print it out and have it handy because you will be needing it, okay? I will not be going very slow explaining this because this was already explained in chapter 3, okay? So you do need to be familiar with how to use the accounting equation to be able to identify if an item needs to be debited or credit, or the classification if it's an asset, a liability, capital, expenses, revenues, or drawing, okay? Okay, so let's begin. The first transaction, Jackson invested cash in the business, $10,000, okay? So this is dated January the 1st, okay? We always enter debits on top, okay? What did we receive? Well, we received cash, okay? What was the offset to my cash? Well, the owner of the business invested money in the business, and her name was Anna Jackson, okay? So we're going to go ahead and we're going to offset it against the capital account, okay? So cash increases, so I'm going to debit my cash account by $10,000. Capital increases, so I'm going to credit my capital by $10,000. So at this point, I am sure I lost all of you. How do I know whether to debit or credit? This takes you back to chapter 3. You need to have this handy. Let me move it a little bit here just for now. Okay, so that way we can see it, or maybe move it here. Okay, so let's look at this first transaction that I'm analyzing. Okay, it says that Jackson invested cash in the business, $10,000. So what are we receiving from ACNT? We are receiving cash. So we're going to look, cash is an asset account. So if it's increasing, I need to debit it. Okay, that's what it have. It's a positive, so that means it's an increase. So if my asset is increasing, I need to debit, which is what I did. Okay, now ACNT invested money in the business. So that means that her capital is going to grow because now she has a $10,000 investment in the business. So let's look at the capital account. Okay, if the capital account is increasing, the plus sign, then I need to credit. Okay, so that is how I know whether I need to debit or credit. The asset is increasing with a debit. The capital is increasing with a credit. Remember, for the accounting equation purposes, debits must equal credits. Okay? And then we would put a short description, original investment in the business. Okay? Okay. So that happened on January the 1st. Okay? Now we're going to go to January the 1st as well. You paid the rent for $500. So January the 1st, we paid the rent. Okay, so you have to identify which accounts are being affected by the payment of the rent. So the question you ask yourself is, what am I paying? I am paying the rent. If you pay the rent, which account would be affected from the accounting equation? Well, the rent is part of an operating expense. Okay, I have to have a building to be able to operate, right? So the rent is an expense. Okay, so if we look at the expense section, my expenses are increasing. I have to pay the rent. So that's an increase to my expense. That means I would need to debit my expenses. Okay, so I would have a debit to my rent expense. Okay, for $500. How am I paying for my rent? That is the second question. Well, we are paying for the rent with cash. Cash is an asset account. So if your cash is decreasing because you have less cash now, you're going to credit the cash account $500. Okay, let's move this down. That way we can continue using it. So this is, we paid the rent. Okay, that's simple. Okay, then what else happened? On the 2nd, we purchased office supplies on account, $300. Okay, this is happening on January the 2nd. So, what did you purchase? The problem says we purchased office supplies. Okay, now you can only use the accounts listed right here. You cannot make up the accounts, guys. The accounts have to be listed here. So office supplies is listed. It has to be spelled the same way. And all of the accounts need to be included. Okay, so what did we buy? We bought office supplies. Office supplies of how much? Of $300. Now we bought the office supplies on account, which means we have not paid for the office supplies. Okay, so if we have purchased something on account, which account would we use? Okay, so you should be familiar with what an asset, a liability, and owner's equity accounts are. That was covered in chapter 3. Okay, need to go back and refresh your memory? Please do so. So if you buy something on account, anytime you hear the word on account, it is a liability. You owe money. Okay, so you owe money. You're going to look at your section over here. Which ones are my liabilities? I only have one, which is called accounts payable. So any money that I owe is going to go to my accounts payable. So my accounts payable is a liability. Okay, so my office supplies increased, which is an asset with a debit. My liabilities, which is my debt, also increased. Your debt has gone up. You owe more money. So your liabilities increased with a credit. Okay, so I've got a liability with a credit. Okay, so what happened here? You purchased office supplies on account. Okay, Remember to always refer to your chart of accounts. That way you know how you need to title the accounts, okay? Okay, so what did we do? We bought office supplies. We have more office supplies. Assets get increased with the debit. Accounts payable, we bought an account. That means our debt has gone up, and our debt goes up with a credit, okay? So that is what happened on January the 2nd. Then we go on to January the 4th. You purchase office equipment on account, $1,500. So we have another purchase. This time is on January the 4th. What did we buy? We bought office equipment. Okay, so we're going to go ahead and we're going to office equipment. And office equipment is an asset. So do you have more or less of office equipment? Well, you bought some equipment. That means you have more equipment. So office equipment is an asset. It is increasing. Therefore, I would need to debit my office equipment. And the amount for my office equipment is $1,500. Now, I paid this on account. Remember, anytime you hear the word on account, it's a liability. The only liability we have is accounts payable. That is listed on your chart of accounts. We only have one liability. So that means that my liability has increased. Now I owe more money. So because my liability increased, I am going to credit it $1,500. Okay. So on January the 4th, you purchased office equipment on account. Okay. So if you notice, debits always go on top, credits follow, and credits are indented. Okay. And for every debit, you should have a credit. Okay. Debits must always equal credits. Okay. So that is happening on January the 4th. Now let's see what happened on the 6th. You receive cash for services rendered, $580. Okay. So you receive cash for services rendered. So you provided a service and now you're getting paid. Okay. This is happening on January the 6th. Okay. So it says we have to be very careful. You received cash. So what did we receive? We received cash. Okay. Cash is an asset account. If you have more cash, that means I need to debit my cash account, and the amount was $580. Now, you received this cash because you provided a service. Okay, you did a job, and now you're getting paid for that job. Now, when we provide a service, which of these accounts would be or categories would be affected? Okay, so if you provide a service, it will always go under your revenues. Okay, that is what you generate out of providing the services that you do. Okay, so we provided a service. Okay, so now my revenues are increasing. I generated money because I provided a service. So your revenues increase with a credit. So we're going to look at the revenue section, and we only have one revenue account, which is called consulting service revenue. Okay. My consulting service revenue, and I misspelled revenue, there we go, is a revenue account, and it's increasing with a credit balance of a $580. Okay. So on January the 6th, we earned consulting fees. Okay. So as you see, the journalization process is very simple. Debits always go on top, credits follow. Debits must equal credits. This is the last transaction I'll be doing. This is for January the 7th. We paid the phone bill, $42. So what are we paying? We're paying for something that we need in the business. If it's something that you have to pay for the operations of the business, it will be an expense account. Okay. So we have to look at the expense section. Okay. And it says that we're paying the phone, right? We're paying the phone, so we have an account called phone expense. Okay, so we're going to be using that phone expense. So my phone expense will be debited. Okay, the amount of the bill was $42. How do you pay your bills? Okay, all of your bills, most of them should be paid with your cash account. Okay, now because you paid with cash, cash is an asset. You have less cash now because when you make a payment, your cash decreases. That means we would have to credit the asset account. So cash would be credited for $42. Okay. Paid phone bill. So I'm going to use, let me move this out of the way. I'm going to use those transactions that I just recorded as reference. You get the gist of it. You're going to, step number 1, okay, when you're working this problem, you're going to post all of your transactions to the journal, all of them, okay? You're going to finish all of these. I'm not going to go through all of them. I'm not going to give you the answers for all of them, okay? I already gave you from January the 1st through the 7th, okay? The rest you do on your own, okay? You're going to follow the same process. Debits go on top, credits on the bottom. Debits must always equal credits, okay? So, assuming this is all I have, now the fun part begins. I need to transfer this information from my journal to my ledgers, okay? Now, these are the ledgers that I will be using. I've already created them. Each account has a ledger. So I have cash here, office supplies, office equipment, accounts payable, the capital account, consulting service revenue, my rent expense, and my phone expense, okay? Every account has a ledger. Every account has an account number, okay? So let's begin, okay? Transferring information, okay? And we're going to go, I like to work in an organized manner, okay? So we're going to start off with the first transaction. I like to go in order, okay? So the first transaction affects cash, okay? And I'm going to highlight them as I do them. That way I know that I've done them, okay? So I've got cash, debit of $10,000. So I'm going to go ahead and I'm going to locate my general ledger for cash. Let me move this over here, okay? I'm going to locate my general ledger for cash. I'm going to put the date the transaction happened. It happened January the 1st, okay? So we're going to do January the 1st, okay? On the item field, you leave it blank. The only time you enter anything in the item field is if this is an adjusting or a closing entry. If it's a regular journal entry, you don't post anything under item. You leave it blank, okay? Now the post reference, okay? What is that? Well, remember we said we had 3 page numbers, okay? These transactions fall under page 1, okay? Remember the instructions? They said that they were broken down between transactions from January 1st through 10, page 1, from 12 to 24, page 2, and from January 25th through the 30th, page 3. So when you are working on this problem, make sure that you do have the breakdown of what goes into page 1, page 2, and page 3. For purposes of our example here, everything got posted to journal page 1. Okay, so what am I going to do on my post reference? I'm going to put J1, which basically means journal 1. Okay, that information is being retrieved from journal page number 1. Now you're going to transfer the transaction. I have a debit of $10,000. Okay, the first 2 columns here, let me go ahead and format this with commas. Okay, now the first 2 columns here, those are used to enter the original transaction of the journal. You're transferring whatever you have on your journal to the ledger. The last 2 set of balances, debit and credit, that is going to be the ending balance calculation of the account. Okay, so the last 2 set of columns give you the ending balance. The first 2 give you just the transfer from the journal to the ledger. Okay, so I transferred that debit of $10,000 over. Okay, so you have a transaction dated January the 1st with a debit of $10,000. So as of January the 1st, what is your ending balance? Well, as of January the 1st, I've got a $10,000 balance in my cash account. You have to calculate the ending balance after every transaction. This is the ending balance. This is just simply the information being transferred from the journal. Okay, so I have transferred over. As of January the 1st, I have $10,000 in cash. Once I'm done transferring the information to my ledger, I need to go back to my journal and I need to notate that I've posted that into ledger 101. Okay, so every account has a ledger number. I'm going to go ahead and take that number, which is 101, and I'm going to put it on my post reference for the journal. Okay, that way that I know that this transaction was posted to ledger 101. Okay, now we're going to go to the next one, which is my capital account. This is Annette Jackson Capital, so we're going to locate the capital account right here. It's account number 311. Okay, so this happened on January the 1st. Okay, item is left blank. This is journal 1. Okay, and for this transaction, I have a credit of $10,000. Okay, so I'm going to have a credit of $10,000. So if you have a transaction with a credit of $10,000, what is your ending balance as of January the 1st? That would be you have a credit of $10,000. Okay, there we are. Now this is account number 311. I'm going to go back to my journal and I'm going to enter account number 311. Okay, so both of those transactions have been posted to the respective ledgers. We're going to move on to January the 1st for rent expense. Okay, so rent expense, I've got a debit of $500. So we're going to look for rent expense. We've got January the 1st, item is left blank. This is journal 1, and I've got a debit of $500. Okay, debit of $500. So that means that my ending balance must be a debit of $500. Okay. Then we have a transaction to cash. Okay. Cash has a credit balance on January the 1st. Okay. So this is journal 1. And cash has a credit of $500. So what do I do here to calculate my ending balance? And this is where we're going to be using the figure 3-2. Well, we know cash is an asset. Okay, cash is an asset. If you have a debit, you add. If you have a credit, you subtract. So in this particular case, I've got a credit of $500. So I initially had a $10,000 debit. Now I have a credit of $500, so I'm going to subtract $500. So that means that my ending balance will be a debit of $9,500. Okay, so my ending balance will continue to be on the debit column, but now it's for $9,500. Okay, so as of January the 1st, my ending balance is now $9,500. Okay, so that takes care of my second transaction. My third transaction, we bought office supplies, so we're going to look for office supplies. We're going to look for office supplies. Office supplies happen on January the 2nd. This is happening on journal number 1. Okay, and we forgot to post for cash. Oh, we forgot to post both of these. We need to remember to do that. Cash is account number 101. And my rent expense, okay, is account number 521. Okay, so we don't forget to do this, because if you forget to put the post reference, the system is going to count it wrong. Okay, so make sure that you do put your post reference. Okay, so going back to office supplies, this is happening January the 2nd. We have a debit of $300. So that means my balance is a debit of $300. That is the only thing I have in my account right now. And then we have accounts payable has a credit of $300. Remember, office supplies is account number 142. Let's go back and put that in the journal. Now we go to accounts payable. Okay, where do we have our accounts payable? Office supplies, right here, accounts payable. So accounts payable, we have, this is happening on the 2nd. Okay, this is journal 1. And the amount for accounts payable is $300, but it's $300 credit. Be very careful, okay? So we have a credit of $300. So that means that your balance for the accounts payable will be a credit of $300. You just carry the balance forward, okay? Whatever it is here, you copy it over here, okay? That takes care of my accounts payable. Now accounts payable is account number 202. We need to go back and put account number 202. Next we have office equipment for $1,500. Okay, so we've got office equipment. This is dated 1/4, journal 1, and I've got a debit of $1,500. So that means my ending balance is $1,500. This is account number 181. I'm going to go back and I'm going to put it on my journal. Okay. Next I have accounts payable. I've got a credit of $1,500. Okay. So accounts payable happening on January the 4th, journal 1, I have a credit of $1,500. Okay. So now let's look at accounts payable. Accounts payable is a liability. Okay. So whenever you have credit transactions, so here you have one credit of $300 and now you have another credit of $1,500. If they're both credits, you add them. Okay, credit gets added. If it's a debit, you subtract. So in this particular case, I've got a credit of $300. Okay, I've got a credit of $300 plus another credit of $1,500. I'm going to add them together. So my ending balance will be a credit of $1,800. This tells me that I owe $1,800 to different vendors. Okay. Okay. So that is accounts payable, and this is account number 202. Okay. Okay, so we are moving right along. Now we're going to do January the 6th. We've got a debit entry for cash for $580. So I'm going to go to my cash account. This is January the 6th. This is journal 1, and I have a debit of $580. Okay. So looking back at the accounting equation, okay? I had a balance of $9,500 debit, okay? A $9,500 debit. If you have another debit coming in, remember cash is an asset. If you have another debit coming in, you need to add that debit. So we're going to add $580, and that'll give me $10,080. Okay, so that would be my balance, and it's $10,080 debit. Okay, so that is why it's very useful for you to have this little diagram, because it tells you if you need to add or subtract depending on the type of an account that it is. Okay, so cash is account number 101. We're going to go ahead and we're going to put that in our journal. Okay, then we have consulting service revenue. Okay, so consulting service revenue, we're going to have right here. And this is happening, consulting service revenue on 1/6. I've got journal 1. And the consulting service revenue is a credit of $580. Okay, so consulting service revenue will be a credit of $580. Therefore, my ending balance will be a credit of $580. And then the account for my consulting service revenue is account number 401. Okay, so we're going to put that there, 401. Okay. The last transaction that I have is my phone expense. Okay, phone expense for $42. So we're going to go ahead and we're going to locate the phone expense. This is happening on January the 7th. Okay. This is journal 1. And the amount of the phone expense is $42 debit. So that will be the ending balance for my account. $42 debit balance for phone expense. This is account number 525. I'm going to go back and I'm going to put that 525 here. The last entry that I'm going to be recording is the entry to cash. Okay, so we're going to go to the cash account and we're going to look at January the 7th, journal 1. Okay. And we have cash with a credit of $42. So we have to remember, okay, cash is an asset account. So if you have a credit, you need to subtract that number from your prior ending balance. My prior ending balance was $10,080. I've got a credit of $42. That's going to take my ending balance to $10,038 debit. Okay. So those are the entries. Remember, then we have to go back and enter the account number of 101. Okay. So this is the logic that I use to complete this problem. Make sure that you do have figure 3-2 handy. Okay. Step number 1, record all of your transactions in the journal, all of them. Once you are done recording all of your transactions, then you begin transferring one by one in date sequential order into your ledger. Okay, and then you have to calculate the ending balance after every transaction. How do you know if you add or subtract? You look at the accounting equation. Okay, it tells you if it's an asset and you've got a credit, you subtract. If it's an asset and you have a debit, then you add. Okay, if it's a revenue and it's increasing, you have more revenue, then you credit, you add. If it's a revenue and it's decreasing, then you debit. Okay, so this is kind of like a map that tells you what is it that you need to do. Okay, so and then once we are done posting all of our transactions into journal page 1, 2, and 3, we begin the transferring process to the ledgers. Every account has its own ledger. Please work in an organized manner. I recommend you print it out like once you have your entries done. That way you're marking them off and you don't forget anything. They have to be in date order. Make sure that you transfer the original amount of the transaction to the first 2 columns. Then the last 2 columns are calculated based on the beginning balance and any transactions coming in. Okay, so this is how you complete your general ledgers. You post your journal, you transfer to your ledgers, and then once you're transferred to your ledgers, you go back to the journal, and on your post reference, you enter the account number that you posted it to for reference. Okay, so I hope this video has helped you better understand how to post from the journal to the ledger and how to calculate the ending balances for the accounts. Like I stated earlier, your ebook does a marvelous job in providing you with examples. Please review those examples. Please practice your assignments. Remember, 2 attempts are provided and I keep the highest score. So the faster and the best you're going to understand is by doing your work, and doing it more than one time will really help, not only in boost your grade, but for you to get more practice. Okay, so that is basically it for this particular lecture dealing with the posting of transactions from the journal to the ledger. Until next time, have a wonderful rest of your day. Bye-bye.